Hello, guys. Good morning. And today we are going to talk about what is letter of credit and how do the applicant opens the LC. What are the key considerations for LC opening? How the documents are presented under the export and import LCs, and what are the payment methods? How the limits are set by the banks. So these are the things that we are going to discuss today, and it's going to be a basic visual guide to understand the LCs, fundamentals, and let's begin. So, section 1 is all about the letter of credit, bank's irrevocable promise to pay, which is whether applicant pay or not, bank the bank who issues the LC by default is an irrevocable letter of credit. So they promises to pay the beneficiary provided all terms and conditions of the credit are met and the documents are presented within the timelines stipulated in the credit. So that's what it says. A letter of credit is a formal financial instrument issued by a bank guaranteeing payment to a seller once specified once specific documented conditions are fulfilled, bridging the trust gap in the international trade. So, in simple terms, the bank promises the seller on behalf of the buyer that payment will be made provided all agreed documents are presented correctly and on time. So, when I say that the documents are going to be presented correctly, which means whatever documents that are specified in the documentary credit and with the conditions, so those conditions have to be met by presenting the evidence and the proof in the documents. So that's what it says. Uh, when you talk about key parties in the letter of credit, you have applicant, issuing bank, advising bank, and the beneficiary. But if you consider UCP 600, uh, applicant is not considered as a party to the LC. Only the issuing bank, advising bank, and the beneficiary are the parties to the LC. But in real terms, the applicant is actually the buyer who is going to pay for the goods that are received, though the issuing bank undertakes to pay the money to the beneficiary for the shipment of goods that has taken place under the LC. But actually, the applicant is the one who is paying for the goods, but the ultimate responsibility lies with the issuing bank who is undertaking to make the payment under the LC. So by default, all the LC terms are mentioned, and by default, it's an irrevocable documentary credit when it is issued. So, in case if a revocable letter of credit need to be issued, then it has to be clearly stated in the letter of credit. Then you have a site, confirmed, and usance and deferred LCs. So confirmed LCs is nothing but in addition to the applicant's bank or an issuing bank, the advising bank or the negotiating bank who is going to confirm at the seller's place, they will also add a guaranteeing like kind of undertaking in addition to the issuing bank's undertaking. So that's what it's called as confirmed LCs. Confirmed LCs will provide extra comfort to the beneficiary that provided all the documentations and the timelines which are stipulated in the credit within that presentation, if the documents are going to reach the confirming bank, then definitely the payment will be done by the confirming bank, irrespective of how they receive funds from the issuing bank. That is a secondary thing. But if the usance LCs normally can be discounted under the confirmed LCs, so that's the extra comfort that the beneficiary has in the confirmed LCs. When it comes to site LCs is nothing but the payments are on immediate basis, uh, provided the documents are uh, along provided the documents are as per the terms of the credit. Usance and deferred. The difference between usance and deferred is usance has a draft and the deferred may not have the draft. So, and but both are paid on a futuristic maturity dates. Basically, it could be 30 days, 60 days, or 180 days, depending upon the tenor that is stated in the credit. When I say credit, I can interchangeably, I'm using the credit or letter of credit or LCs interchangeably in this presentation. Let's come to the section 2, which is opening a letter of credit. How a buyer opens a letter of credit. The process begins when buyer and seller agrees on LC as the payment method in the sales contract. The buyer then approaches the bank to formally issue the instrument. So the MT 700s are issued, which is nothing but the LC. And if the terms of the credit cannot be accommodated in MT 700, then MT 701 is also issued, and those LC issuances are based on UCP 600 guidelines. And when the documents are presented under the LCs, the 5 days of period is there for the bank or financial institutions to check the documents and advise any discrepancies, or they must pay on site basis, or uh, do an acceptance under the letter of credit, or a deferred payment undertaking under the letter of credit. See the opening steps for the buyer. Buyer means the applicant who is actually applying for the LCs. So the first step is the agreement of the purchase contracts, like what are the goods that are going to be shipped, what will be the price for the goods, what type of incoterms are we going to use it, how the shipment dates will be decided. uh, so because the LC requires a later shipment date, so that has to be pre-agreed between the buyer and the seller. Then the port of loading and port of discharge, that has to be there in the LC, and how the payment is going to be done under the LCs, whether it's on site basis or whether it's on usance basis. Then submit LC application to the issuing bank. Fill the bank's LC application form with full trade details, beneficiary information, and the required documents. So the LC application, when it is submitted by the applicant, the authorized signatory of the applicant's company has to sign those LC application, and those signatures are verified by the banks, and then the LCs are issued based on the LC application. So bank has to verify the LC application, whether all the details are mentioned in the LC application as per the contractual terms. And then issuing bank will verify the credit facility of the applicant. If there is no credit facility available, then 100% or 110% cash margin need to be taken from the applicant. And then that's what it says. The third point says collateral or cash margin need to be taken. So uh, if any lien need to be marked against the FD, or if any cash margin need to be taken from the applicant, that has to be done before opening the LC for the applicant. Bank evaluates and issues the LC. So basically, a bank will check the credit worthiness, credit limit, and issues the LC via SWIFT MT 700 to the advising bank, right? And then the seller will receive the LCs through the advising bank. Advising bank's main role is to authenticate and take the charges, and then they will advise the LCs to the beneficiary. Section 3 will depict the key considerations before opening the LC. So, what are the applicant? What the applicant must check before opening the LC. So, before instructing their bank to issue an LC, the buyer applicant must carefully review multiple commercial, financial, and compliance factors to avoid costly discrepancies or losses. So once an irrevocable LC is issued, the buyer cannot unilaterally change or cancel it. Every detail must be corrected before submission, right? So all the details has to be double checked and verified as per the contractual terms, and so that the applicant must check all the details so that LC is issued correctly, and there will not be any issues while the documents are submitted against those LCs. Section 3. So, what are some of the checklist? This is not an entirety, but what are the key checks that need to be performed by the applicant? So, they need to verify supplier credentials and track records, confirm supplier's legitimacy, capacity, references, and history of timely delivery before committing to LC payment. Right. So, the supplier must be genuine, and he must be doing business for a longer period of time, and he must be genuine, and so that we we can avoid any kind of fraudulent activities by the supplier, because sometimes the goods are not shipped at all, some phantom shipping, you call it as phantom shipping, so where the goods are not shipped, and sometimes the inferior quality of goods are shipped. So in order to avoid these kind of situations for the buyer, it is better to call the inspection certificate or quality certificates from the third party, who can actually verify before the shipment whether the goods are in line with the buyer's expectations or applicant's expectations. Confirm goods description precisely. Okay, so exact description, HS code, quantity, unit price, packaging, and quality specification must match the contract word for word, right? So it is always good to uh, state the description of goods exactly, and it has to be brief, not in full details, and so, but the important thing has to be mentioned in the LC, so that the those documents can be verified against the requirements can be verified against the invoice, and the bill of lading or the airway bill, right? Then you have Incoterms, FOB, CIF, CFR, XWorks. These are some of the Incoterms which are frequently used in the international trade. So those risk and cost need to be defined properly in the contractual terms, and this need to be checked by the applicant whether the exact Incoterms which is required has been chosen, and it has been put in the LC application while applying for opening the LCs, right? So set a realistic shipment and expiry dates. So the applicant and seller, they need to have certain timelines for the presentation of documents, for the shipments, and after the shipment, after the seller ships the goods, how much time is required for preparation of documents and submission to the advising bank or to the negotiating bank. So that timelines need to be properly aligned, so that there will not be any late presentation or late shipment, and the document also can reach the bank on a timely basis, and then the payment can happen on a timely basis. So these timelines need to be predefined in such a way that everything goes in a smooth way. Financial and compliance checks. Check available credit limit with your bank, currency FX exposure, which is very important, because there could be a lot of FX loss if the currency hedging is not done, or if there are high value shipment of goods. So these FX fluctuations between issuance and payment can materially affect the cost, because see, today you are opening the LC, and the shipment is going to happen like after 30 days or after 45 days. So in case of oil shipment, in case of some of the commodity based shipments, the price fluctuations may happen. So there could be some kind of value depreciation of currencies, and so that some kind of hedging need to be done in the FX, so that the loss can be mitigated, or it can be it can be reduced, right? So then you have a regulatory compliance and import compliance. Verify import permits, country sanctions, restricted goods list, central bank regulatory approvals required for opening the LCs. Review all the required documents carefully. List only documents you can realistically verify. So you should not mention any conditions which are uh, for which the documents are not presented, right? So vague conditions should not be mentioned in the LC. Then whether partial shipment is allowed and transshipment shipments are allowed or not, that has to be clearly stated in the LC application, as well as so as to reflect in the letter of credit. How documents are presented under the LC. So after shipment shipping goods, the seller must assemble a precise set of documents and present them to the nominated bank within the LC's validity period. This triggers the payment process. So once UCP 600 rules are defined, like banks deal with documents and not with goods, services, or performances. So if documents comply, the bank must pay regardless of any dispute between the buyer and the seller regarding the goods, services, or performances, right? So here the bank will verify documents, and purely based on the documents, the payments or negotiations will be done by the bank, or the acceptance will be done by the bank. They are not concerned with the goods, services, or performances. uh, so in order to mitigate this kind of if any inferior quality of goods are shipped, or if any short shipment is happening without the knowledge of the buyer, then in order to mitigate those, you have some third party certificates which can be called in the LC, and it has to be structured in the LC properly, so that we can reduce this kind of risk. Essential documents package. So you have commercial invoice, bill of lading, packing list, inspection certificate, certificate of origin, then insurance. So these are some of the documents, but these are not the entire list. There could be many other documents which can be called under the LCs. Document presentation workflow. So you have uh, the workflow will be something like the seller will ship the goods, obtain the transport documents, seller will comply the full document list, presents to the nominated or advising bank. Bank examines the documents within 5 banking days. They will either advise the discrepancies, or they will make the payment immediately if the LC is on a site basis, or they will accept the documents. How payments are made. So payments can happen either as a side payment, or deferred, or usance payment, or the acceptance. What is the LC payment cycle? Advising bank confirms document compliance. Issuing bank reviews and approves within 5 banking days. And issuing banks debits the buyer's account. Advising bank credits the seller, and documents are released to the bank. So once the documents are released by the banks, the applicant will go to the shipping company, to the port, and they will uh, get the goods released from the shipping lines. When goods have when documents have discrepancies. So section 5 is all about discrepancy handling. So what are the common discrepancies that is found in international trade? The shipment can be late, the amount can exceed the LC value, so LC overdrawn will be the discrepancy. Then wrong port of loading or discharge. So this will if the port of loading is not as per the LC, then definitely bank will make the document discrepant. And if the description of the goods are not matching and it is not exactly as per the LC on the invoices, so then there is a difference in the goods, right? So this is also will be the discrepancy. So missing or incorrect endorsement on the BL, then expired LC or insurance certificates. So insurance certificate expiry is one of the main thing that need to be considered while checking the documents. And along with that, insurance certificate also must be signed by the insurance agent or by the insurance company, right? So that also need to be taken into consideration when checking the documents. Resolution options: seller corrects and represents within the validity. Buyer formally waives the discrepancy. Bank pays under reserve at seller's risk. Seller request amendment via buyer's bank. Converts to collection basis. Forfeit LC protection. Right. So see, when the documents are discrepant under the LC, then the ultimate protection of the LC is lost because the documents are discrepant. So and if applicant approves, saying that okay, I will accept these documents as presented, so the documents went on approval basis, so the ultimate protection under LC is lost. Now it is on the buyer's side when he is going to pay, because he is going to accept the discrepant document. So in those circumstances, the issuing bank may not be liable to pay because the documents are discrepant, right? So this should always be kept in mind, that if the documents are discrepant, the LC protection is actually lost. And then it is on a buyer's it is on the buyer's hand when he is going to make the payment. He may delay payment because the documents were not in line with the LC terms, right? How LC limit works for the bank? So basically, bank will determine the credit worthiness based on the credit scores of the company, as well as the owners of the company, and then they will set some credit limit, and those will be the approved limits. So from the approved limit, there will be LC limits. So see, the credit facility can be granted for many products. So out of those many products, one of the product can be LC product. So under LC also you may have sub limits like site LC limits, usance LC limits, deferred payment LC limits. So uh, when the approver section, the approver function of the bank in trade finance need to see these limits, that under which limit this LC is going to be opened, and they need to block the limits accordingly. And when the payments are received, then the limits need to be released and reinstated in the approval system of the bank. So this is what, in brief, it talks about the contingent liability. So when a bank, when the issuing bank issues a LC, they will have a contingent liability, right? So that though the liability will be booked as a contingent liability. So the bank is not lending money, but it has committed to pay if the seller presents compliant documents. So this commitment consumes the buyer's credit limit, right? It's very clear. So types of credit facilities for the LC. So as I spoke to you, that LC issuance limit, import finance limit, omnibus trade limit, cash margin limit, revolving LC limit, usance DA limit. So these are some of the limits under the LCs, which has to be taken into consideration by the banks. These things are these credit granting facilities and sanction limits are actually set by the credit division of bank. So, so how the limits are assessed, used, and monitored. So credit assessment by the bank. Bank evaluates buyers' financial statements, trade history, collateral, and business cash flows to determine approved LC limit. limit sanction and documented. Credit committee approves facility letter specifying limit amount, tenor, margin requirement, and security conditions. Each LC issuance reduces available limit. When LC is issued, its full value is blocked from the available limit until the LC expires and or payment is settled. So once payment is made or LC expires unused, the portion of the limit becomes available again for the new LCs. So annual review and renewals. So this annual renewal is nothing but whether the limits are utilized or not. The annual review has to be done, uh, uh, like whether to increase or decrease the limit based on the payment patterns and based on the credit worthiness of the customer. When I say customer, it's basically the company, the applicant bank or applicant company. LC limit utilization in practice. So bank will actually set like total approved limit. Out of total approved limit, how much is utilized and how much is the available limit, which is remaining to be utilized. So they have, if the LC limit exceeds, then further LCs cannot be issued. Then if the sublimit exceeds, then proper approval need to be taken from the credit function. And then capital adequacy, then this is basically for the Basel purposes, Basel reporting purpose. End-to-end LC mastery. So we have understood bank guaranteed payment instrument governed by UCP 600. Then there are four parties, which is applicant, issuing bank, advising bank, and the beneficiary. The process, how the process begins. First is step is the contract. Then the application is prepared by the buyer company or applicant company, and then the LC is issued by issuing bank. Then the shipment happens. Then after the shipment happens, the payment will happen. The documents are presented. Banks has 5 days to examine the documents and then advise the discrepancy or payment advices. And then credit limit consumed as per the LC issued. When the credit period expires, then the limits are reinstated, or when the settlement is done by the seller, then the limits are reinstated. Then the annual review based on the financial has to be done by the banks. So here, when I say bank, it means bank or a financial institution, because there are many financial institution who issues LCs, right? So that also has to be considered. Uh, I hope that you have liked this session. Please like and subscribe. And in case if you feel that I need to improve in few ways, then I always welcome your comments. So thank you so much for attending this session, and I will try to improve myself on the coming days. Thank you so much.